Great morning, fellow traders. This is Austin. It is Tuesday, December 2nd. I'm working with crude oil today. It's a wild, wild market these days. I'm working with crude, and my operating hours are 6 a.m. until noon Eastern Time. And that's pretty much going to be the core trading zone for me from now until about next April or May. And then, quite frankly, it might be the core operating mode for me for a long time. But between now and next April and May in the springtime, when other projects get started, that would be trout fishing and wild turkey hunting in several different states, things like that. The 6 a.m. slot until noon is going to be the bulk of my work, and crude oil is going to be the bulk of that. Not to say that I won't trade outside of those hours, not to say that I won't trade outside of that market. You know, the Russell is still of interest, and Forex markets are of interest. As long as I'm at work at 6 a.m., I might, include different spot symbols there as well. So we'll see. But for now, for today and Thursday and Friday, I'm skipping tomorrow. But today, Thursday, and Friday, we're going to work crude oil 6 a.m. until noon Eastern and see what we accomplish here, setting up for next week. Alrighty then, we're about to see the open of stocks. It's 9:26, and crude set up for a long, somewhere around 68.10, and short potential somewhere around 67.85. So I'm waiting for it to trade those zones, and we'll see what happens. The open range is 67.80 low to 68.24 high. Working between those, and I wouldn't be surprised if we see a fair amount of digestion from last week's move, especially due to this, because that was Friday, of course, and then this was Monday, and it's just a retrace, just one big V. And so I wouldn't be surprised if they trade inside of this general range here from 66 area to 69 area, which would be, I mean, you're talking 300-cent range, but the meat of it is probably going to be this and that. I wouldn't be surprised if crude stays inside of that channel roughly for days. So we'll see what happens. Anyway, that's where we're at now. I'm going to be a buyer around 68.10 area. I'm going to be a seller around 67.85 area. And I'm going to be an observer in between. 9:27. Okay. Was long earlier, as suggested. That blew out. I had an 8-tick stop and it slipped 2 ticks. So that went out minus 10 ticks overall, and then we are from the sell zone as discussed, blew right through 67.85, couldn't get filled there. Wasn't even a pause, and then and tried but didn't happen. Price is just smoking all over the place. And then there's a secondary sell, as we discussed, 67.50 area. I'm currently working that. We'll see what happens. It's pointing towards 66.80 at the 233, and then on down. So that's the statistical probabilities. That's the math of it all. And as I said earlier, I can't remember if I said it in here or in the live room, members only, or both. Bear with me if I'm repeating myself. Crude oil is highly illiquid right now. It's just blowing all around, because the demand from the algos exceeds the resting orders of true open interest. And that's a hard thing to describe, and I don't understand the process fully. You know, someone looks at a chart and like, wow, look at all that volume. All that volume there. You could have filled all the contracts you want. Look at all the volume. Well, the volume shows what the demand was. If so, you know, and no different than if you have a large institution who wants to fill a bunch of orders, and they just keep clicking in 1,000-lot orders, you know, they would smoke the market for hundreds of ticks all over the place. That doesn't mean you could get filled. And so then later on in the day, you're like, wow, look at all the volume. There was 1,000-lot cleared there. I could have traded all I want. No, you couldn't. You get destroyed. It's like a tidal wave hitting the market, and that's the challenge when crude gets volatile like this. It's sexy, looks great. Like, wow, 300 ticks, 200 ticks. Look at all of that. I could have caught the whole thing. I could have caught it all. You'll say that in your mind, after the fact, but the reality is when you're sitting in there trying to trade it, it'll blow through 20, 30, 40 tick zones before you can blink. And trying to get filled there or trying to hold a stop there or both can be impossible. And that's the reality of the market versus the illusion of the market right now. But for better or worse, we're working this sell order and we are seeking 50 ticks or greater as usual. It's pointing towards this here. Doesn't mean it's going to make it there before it chops 5 more times, but that's where it's pointing towards right now. It is 947. Okay, so price is moving in favor. It's hitting the zone of congestion that I spoke of. I'm going to take this to 21 ticks. The stop, if they rip that out, then it's going to recover the 10 prior plus 10 more, and then if they go 50 or better, I'm going to aggressively lock that. As discussed, there's a 90% probability on any given day, this one included, that price trades to this level. That's a mathematical statistical probability. That has nothing to do with sentiment or emotions or beliefs or anything else. So that's what we're trying to do. Meanwhile, price is in extreme whip rip mode. So maybe it's going to blow 20, 30, 50 ticks in favor, or maybe it's going to turn right around and smoke this one right out. We have no idea. That's the speed of the game right now. 952. Okay, it has gone 50 ticks, just about exactly. I'm going to take it down a little bit more. Now there's 31 ticks on this stop here. They're holding right there in that general area where we expected they would. That's no surprise to anyone here. And if they take it down more than 51 without going insane on the ladder, there they go. So trail to there, and you can see, the speed at which price is moving. So I can't even follow it visually. I don't know anyone who can. Get that out. There's 60 ticks. Or 61 ticks, I should say. And there they are at the 233. Probably a reaction there, as usual. I'm using a 200 volume chart for the actual trigger. I mean, they just fly right through that. I'm just going to trail a stop more than 70 ticks because I'm expecting slippage here. Yeah, there it was. Okay, so that stop was in, let's see, that would be 74 ticks on that one because it was minus 10 ticks on the long side and then plus 74 on the sell side, and they traded through our sequences we expected, and they traded to the price magnet as expected, and I am done as predicted. Hope this helps. Look forward to seeing you on Thursday. Remember, I'm off tomorrow. Look forward to seeing you on Thursday. We'll do it again. Best trading wishes.